Hi, I'm Nicki with Bosley Real Estate.
And I'm Jake with Mortgage Edge, also known as Mortgage Jake.
And we thought it would be really useful in this crazy world of ours right now to talk about some situations for people who are freelancers, self-employed, incorporated, who are trying to get mortgages and suddenly find themselves denied. So we're going to do this in three parts because there's three different scenarios. Today we're going to talk about people who are incorporated and how you can show your finances to actually get a mortgage, should you so desire. So,
yeah, absolutely.
Yeah.
So getting a mortgage is the first step in getting a good property. We all would love to buy property in cash. It's very, very difficult these days.
Yeah.
Whenever someone who's self-employed calls me, the first question I ask is, are you incorporated or are you a sole proprietor? Today we're going to talk about the group of people who are incorporated. So you're incorporated, you're doing well, because to run a corporation does cost accounting expenses, potentially legal expenses. You're probably making over $150,000. That's the typical number.
That's the minimum to make it worth it.
To make it worth it,
Yeah.
exactly. So you're doing well. So right away I know, okay, great. Now, do you pay yourself a T4, a dividend, or a combination of both? That's question number 2. So you'll send me a 2-year history of your tax return, both your business and your personal, and I will tell you based on those 3 numbers that I will see in business and personal that I can use, what you will qualify for. Now, to be incorporated, you can have less than 20% down. You don't have to have the 20%. Of course, it helps, but to be incorporated, as long as you're paying yourself enough income to qualify for the mortgage, the lender will treat you like a full-time employee.
But that's the big thing I think that people don't
Exactly.
understand, because most people, of course, are trying to show that their personal income is as low as possible, because that's what we're all trying to do for tax reasons. Let's not pretend.
Absolutely, and we're not employees. We don't have the safeguard of maternity leave, paternity leave, health expenses, so we have to expense that ourselves. And that's why people show less income. So for the people who show less income than you would need to qualify, being incorporated, absolutely very easy. We'll look at your business financials, your personal financials, and we'll figure out a way to qualify you.
Now, you said that they can buy with less than 20% down. But a corporation, what if your corporation is buying?
No, they must have at least 20%. If your corporation is buying, you have to have at least 20%. Now, then the question is it an active corporation or a holding corporation? It is very hard for active corporations to buy. Only a couple of banks do that kind of financing.
Okay.
We recently did a deal that did it.
Exactly. Yeah.
But most of the time it has to be a holding corp that's guaranteed by either an active corp and an individual together. Incorporated buyers have a little bit of challenges, but the fact is, if you're incorporated, like I said, you're doing really well. If you need to pay yourself a little more, we'll figure out how much more that will be. But the lenders want to see a 2-year average of how much you're paying yourself.
Okay.
And the last thing I wanted to say is, if you don't meet the guidelines of the prime banks, there are great lenders out there that will work with you, especially if you're incorporated. They're alternative lenders, Home Trust, Equitable Bank. They won't look at your financials as closely as they'll look at your bank statements. So there are 3 or 4 ways.
That actually sounds kind of sketchy, so I just want to clarify, they're legit lenders. This is not sketchy money.
Yeah, no, they're multi-billion dollar
yeah.
banks, and we work with them closely. They'll look at your bank statements to figure out your cash flow, because that's how we assess true affordability and qualify.
So for the most part, then, people who are incorporated are probably not facing the same kind of challenges as people who are self-employed or
Sole proprietors.
Or sole proprietors, yeah.
Exactly.
The gig economy, though, that we're seeing so much of.
So we'll talk about that in next week's series, because I have a lot to say about sole proprietors and how we can help you guys get a mortgage. For now, the takeaway is simple. If you're incorporated, make sure your taxes are on time, make sure you're financially ready. Call us, we will tell you what you can do, and then we'll go see places.
Jake will help you get the money, I'll help you get the house.